I'm joined by Francisco Blanch. He's head of global commodities research for Bank of America-Merrill Lynch. Francisco, nice to have you on this side of the Atlantic.
Thank you.
First of all, there's so much concern that actually the price of oil will go up. We had assurances yesterday from the Saudi oil minister that they're ready to open the taps to put more supply on the markets. Are you still concerned that the trend will continue being upwards?
Well, I think first of all, it's very good news that OPEC has finally reacted to the rising oil prices. So I think it's going to keep prices perhaps a bit more contained. We are, however, structurally positive on the oil market. We believe demand is going to remain quite robust in 2011 and maybe also 2012. OPEC does indeed have some spare capacity, so that will temper the rising prices. But overall, we do see a positive spin on the market. We do think that prices, on average, will trend higher throughout the year. We will break through 100 in 2011, and we'll head out a little bit higher in 2012.
And this, Francisco, is really on strong fundamentals, but also cheap money possibly coming from QE2?
Absolutely. We do have plenty of liquidity coming into the market. Negative real interest rates are a big support to oil prices. And of course, the only point that is going to be bringing them down is increased OPEC output, which is what we just heard from the Saudi minister, as well as a shoulder season in demand, which is just about to start over the next couple of months when we get past the winter. So I do think oil will generally trend higher, but it's going to be a relatively smooth path until we get to a much tighter environment within a 2 to 3 year framework.
And you've just said that oil above 115 barrels is going to put the global economy at risk. Is there any danger that they will actually let it rise to that level? Is there something that we're going to see next year?
Well, I mean, I do hope that we do continue to get a positive supply response from OPEC. So there is a chance that we'll get to those levels within a 12-month framework, substantial chance, I would say. I do think OPEC will probably only allow incremental output in as much as they view a fair price. They are getting a fair price for their oil. Think about the negative real rate environment that's actually hurting their own returns on those barrels that are coming out of the ground, right? So I do think that OPEC has a pretty substantial hand in this market. And I would say that the one market that would probably experience much more upside pressure this year would be copper and some of the other industrial metals markets.
Francisco, are we going to see the same controversy that we saw a couple of years ago in saying, yes, well, prices are 130, 140, but that's to do with investors' speculation?
Look, I mean, there's no doubt that OPEC production has been declining for the last 6 months from the Greek crisis actually onwards. OPEC has been bringing less supply into the market, and demand has been running 3 million barrels a day year on year in terms of growth. Inventories have been falling, so it's pretty clear that the run-up from around $75 a barrel to 100 to close to 100 has been primarily driven by strong fundamental demand and a lack of OPEC output. I do think there is little speculation involved here. But who knows? I mean, it's a big market. It's hard to manipulate. Yeah. But there can always be some speculation on the sides.
Francisco, thank you so much. Francisco Blanch there.